It's my pleasure to invite our very first presenter in the person of the Chief Executive Officer, Enhancing Financial Innovation and Access, Isaiah Owolabi, for the very first presentation of the day, the status of access to finance in Northeast Nigeria, challenges and opportunities. Please, a round of applause. You're welcome, sir.
Good morning, everyone. Permit me to stand on existing protocol. One of the things I'll promise as I go on today is to make sure that I do not repeat the EFINA data that has been quoted earlier. I'm very much used to this because we conduct the financial access to finance service survey. So when we have events like this, we are always happy to have some of our data quoted. I will be speaking about the access to finance in Northeast Nigeria, challenge and opportunities. But before I go into my presentation, I'd like to talk a bit about EFINA, Enhancing Financial Innovation and Access. Since 2008, we have worked as a financial sector deepening organization focused on promoting financial inclusion in Nigeria. During this time, we have mobilized over $24 million to accelerate the impact of financial inclusion and economic inclusion interventions in Nigeria. Our effort has led to formally including up to 4.5 million Nigerians. Our focus is on research, innovation, digital finance, and capacity building. Today, my presentation will be focused on discussing the state of financial inclusion in Nigeria, financial inclusion in the Northeast, challenges and opportunity, recommendations, and conclusions. If we look at the overview of financial inclusion, I'd like to say one thing that is very important. Opportunities and privilege, they very much look alike, but they can be invisible when we have it. Let us think about financial inclusion as an opportunity and a privilege. For many of us here today, we are insured. We have a bank account, and we probably have a pension scheme protecting us. For over 50% of people in northeastern part of Nigeria, they do not have this opportunity and privilege. So it is invisible to them. To us, it might be invisible, but to them, it's very, very visible. The lack of access to finance, which could mean a lot of things. And as I continue in this presentation today, I'll be talking about what financial inclusion really means. What does it mean to be financially included? What does it mean to be informally served? To be formally served, banked, and served by formal financial institutions. Financial inclusion means access to financial services and products. This could include bank opportunities to open bank accounts, have access to insurance, pension, and other financial services and products. And formally served are those who are those who have financial products or services, and those who are also informally served are those who probably have access to financial service or product, but not within the formal system. Let us look at some of the data on financial inclusion in Nigeria. Today, we have about 35.9% of adult Nigerians, that's those Nigerians above the age of 18 years, who are financially excluded. This means that 35.9% of about 100 million people do not have either formal or informal access to finances. What does this mean? It would increase their dependency rate. It reduces their access to economic opportunities. It also could impede their opportunity to procure healthcare, access to education, and even have good opportunities to nutrition that can help them to live to their full potential. If we also have some sort of deep dive into financial inclusion and we think about Nigerian adults as a whole, we see that the number of people who are banked is 44.8%. Number of people who are include formally but non-banked, 28%, and informal, 32.7%. Formally served adults use a combination of formal and informal mechanisms to manage their financial needs, indicating their needs are not fully met by formal sector alone. If we take a very good look at the northeastern part of the country, we would realize that this data shows even a wider gap in terms of financial exclusion. 50% of the adult population in the northeastern part of Nigeria are excluded. If you compare that to the most included part of Nigeria, which is the southwest, we have 17% which are excluded. If we do a thorough deep dive into the northeastern part of the country, we will also realize some of the interdependencies that is associated with financial inclusion and exclusion. For example, 54% of those in the northeastern part of Nigeria do not have secondary education. Well, there are big opportunities. 76% currently own a mobile phone. 39% can read English comfortably. 65% can read Hausa comfortably. 59% between the age of 18 to 35. 83% live in rural area. These statistics represent huge challenges, but if we also look at it in detail, they also present unique opportunities. For example, in the designing of financial services and products, we have products focused on including women, on including the less educated. But how many of these products are in local language? How many USSD code today do we have in the local Hausa language? If we have 39% who can read in English, but 65% who can understand and read Hausa, I think there's a big opportunity if we start to ensure that even technology speak in the language that people understand. If we think also about the fact that nearly 1/3 of adults in the northeast part of Nigeria are primarily dependent on farming to meet their financial need. And if we think about this in terms of 26% are dependent currently, 26% depend on farming, informal sector 7%, business owner 32%, and formal source of income just 10%. We do understand that the formal source of income has a higher likelihood of giving people opportunity to insurance, pension, and other economic opportunity that would make them financially included. If we look at the financial access performance across states in the northeastern part of Nigeria, we realize that states like Gombe, Bauchi, and Yobe have financial exclusion up to over 60%. And what that means is that over 60% of the adults living in these states are financially excluded. They do not have access to formal or informal financial services or products. If you look at states like Taraba, which is showing a lot of progress, just 19%, and 53% of people are banked in the states. However, if you look at states like Yobe, where you have just 20% of adult population who are banked. Stubborn access gaps have persisted since 2008 for the most excluded groups: women, northern Nigeria, Nigerians in rural areas, and young people. Adults with lower levels of education are significantly more likely to be formally excluded. 83%, 5.9 million of adults with lower level of education are formally excluded. The financial inclusion gender gap has persisted. 72% of the adult population are formally excluded, as against women, 57% of the male who are formally excluded. It's important to note that there's a gender lens to financial exclusion, just like there's always a gender lens to all economic indicators. So it's important that we think about financial inclusion not just as an economic challenge, but also a gender challenge. It's important to note that if we must achieve our financial inclusion targets, we need to make sure that programs, interventions that are focused on accelerating the impact of financial product and services to women are invested into. If we think about the low usage of financial services across the Northeast, we realize that 1/4 of adults are saving outside the formal financial system. About 1/5 rely on non-financial channels for remittance. About 1/3 are borrowing outside the formal system. Less than 5% have access to formal credit. If we think about this and consider how SMEs and MSMEs can thrive in this society, you see that they have low chance when they do not have access to credit. We understand from basic economic principles that for SMEs and MSMEs to thrive, it's important that they have access to credit, and they have access to credit also that is easy and provide also some sort of support for them in terms of the implementation of their business. If we think about risk, percentage of adults in Northeast Nigeria that have experienced a life event in the past 12 months that caused unexpected expenses making it very difficult to pay for things. 70% of adults above the age of 18 actually acknowledge the fact that they have experienced life issues that probably make it extremely difficult for them to make some certain payment. And if you also consider this in terms of the relations to the national uptake of insurance, where we have less than 5% of Nigerians having uptake of insurance. And if we think about it in terms of the northeastern part of Nigeria, the percentage is even much lower. What that means is that if these people experience some sort of shock, it would be difficult for them to recover. And what does this mean for long-term economic outcome? They have limited chances to even be able to live to their full potential or contribute to economic growth. If we consider it in terms of digital payment, and we think about percentage of adults that have made at least one electronic payment for goods, services, or bills in the past year. For Southeast, 15%, South-South, 19%, Southwest, 32%. In the northeastern part of the country, we have just 9% of adult population who have engaged with digital payments. And if we think about access to banks, perceptions about banking, and low or irregular income, and how all of these represent obstacles to having a bank account, we realize that income not being regular, lack of jobs, banks being too far to where people live or work, and costing too much to reach the bank shows some of the biggest reasons why there is financial exclusion in this region. For example, 34% of the adult population claim that irregular income is one of the biggest factors that limit their opportunities to having access to financial service or accessing or using any financial product. And if you continue to think about that in terms of attitude and perception, access to bank, unemployment, cost of banking, and low interest on deposit, we realize that if we must achieve financial inclusion in the northeastern part of Nigeria, there are a lot of factors to be considered. And there is no single solution that can help us to significantly drive up financial inclusion in this region. We need to make sure that we incorporate or integrate different solutions to make sure that we are able to accelerate the impact of programs focused on financial inclusion in northeastern part of Nigeria. If we also try to do a thorough deep dive into barriers to financial inclusion in Northeast, we see that most people in northeastern part of the country are facing low economic inclusion. 1/4 are dependent. 1/4 rely on farming as their primary source of income, often characterized by low and seasonal income. Less than 20% of the population earn below the minimum wage. 3 in 5 cannot read English. 1 in 2 have not achieved secondary education. 83% currently live in rural communities. If we consider some of the big opportunities for action, we realize that the use of mobile money services to reduce the cost to serve low-income population presents very big opportunity. Technology is important, but the relevance of technology is felt when we can see the impact in the lives of people on the ground. When people on the ground do not feel the impact of technology, we cannot say that technology is relevant. Raising awareness of financial products and services through financial literacy program. Now, it's important to state that financial literacy program should not just be an event or an activity. It should be an intervention that is integrated into other SDG programming and also connected to market opportunities. It is also important that financial literacy program consider context and culture. That is why, as mentioned earlier, ensuring that local language and also financial services and products are defined as much as possible in local terms and parlance to make sure that most people, especially women and young people, are included and are able to have access to these opportunities. It's also important to design financial product and service to meet the need of low-income group, as this would increase the usefulness of this product and services. I was engaging a financial institution who talked about some of the financial products that they have for women. And one of such products is focused on supporting women who are probably transacting in business of 1 million naira and above to be able to have access to business mentor, counselors, and trainers. What these are significantly done is to make sure that most women at the bottom of the pyramid are excluded in this type of program. So it's important for financial institutions and program designers to consider the use of evidence or data as they think of designing financial service or product, or also as they consider integrating financial service and product into any intervention. Mobile money promotion should focus on raising awareness, simplicity, and sharing the benefits of mobile money. Out of 3.6 million adults living in Northeast that are interested in mobile money, this is a big opportunity. From our survey, 3.6 million adults living in northeastern part of the country actually show interest in mobile money. Out of this, 65% of them are men, 79% of them live in rural area, 68% live in communities with any financial access point in and around them, 39% of them are business owners, 24% are farmers, 21% of them are dependent, 85% of them own mobile phone. This presents big promise and a big opportunity to actually make sure that we are leveraging mobile money to financially include those living in the northern part of Nigeria. It's also important as we consider the use of data to make sure that we consider the use, the identification of unique identities. For example, within the data space, there's so many conversations around the number of agents, bankers across the region. But what we are not saying is the number of unique identities that actually are agent bankers. For example, there are claims of 1 million, over 2 million, over 10 million agency bankers across this region. But what we probably have is 10 million POSs and not 10 million individual agents within this region. It's important to consider as we think about increasing the reach of agency bankers across this region to make sure that we are increasing unique identities, individuals in different regions, communities across northeastern part of Nigeria. This also shows the percentage of people who are interested in micro insurance. 18% of the adult population show state interest in using micro insurance. As mentioned earlier, it's important that financial inclusion is defined beyond opening a bank account, but we also think about other financial service and product such as insurance, micro insurance specifically, and pensions, micro pensions also. For many adult Nigerians today, and most importantly, because of the conversation that we're having today, adult population in the northeastern part of Nigeria, when many of them get to the age where they cannot work or do anything economically anymore, they do not have what I would probably refer to as shock absorbers to be able to support them to continue to live to their full potential. So it's important for us to holistically connect financial services and products for adult population in the northeastern part of Nigeria. As I conclude today, I'd like to say one thing. The bottom line principle of the Sustainable Development Goal is to leave no one behind. It will be very difficult for us to achieve the Sustainable Development Goal if we continue to leave the 50% of the population in northeastern part of Nigeria behind. We need to make sure we invest more and do more to integrate programs to achieve financial inclusion in the region. Thank you very much.